So you would think new year, new resolutions, maybe better investment techniques. Nope. Melvin Capital is continuing the bleeding into January of this year after losing billions of dollars in 2021 on botched GameStop shorts. We see down 15% in January. Okay, that's almost 3x what the S&P decline was. So not good at all. Going back to last year, nearly 55% losses, over $7 billion vaporized, betting against GameStop. So even though he gained back 33%, he's still down almost 40% on the year and needs to gain about 94% to break even. This has continuously gotten worse over time. So that 94% has probably increased without a doubt. But he received about $3.2 billion from Ken Griffin, shout out Citadel, and Steve Cohen, who's 0.72 asset management, also the Mets owner. So definitely didn't put that money to good use. But let's go see what he's investing in and see where his current holdings are. So taking a look at this spreadsheet, I put 21 companies up there. Some of them are in the top 20 holdings, but they're not necessarily in order. Firm is the first one, $119 valuation, all the way down to 35. Now, over the past 2 weeks, I've watched this free fall. It had a negative 50 or 60% day. That should have been red flag number one, but it just continuously bleeding out. I would have already liquidated the position, but currently sitting at over $250 million in losses. AMPL, same exact thing, just watching it get destroyed. DoorDash, $140 million loss. Facebook, they loaded up, I believe, over 1.3 million shares of Facebook in Q4 or Q1. Either way, high valuation, $330. Today was trading in the mid 190s. So just horrible valuations right there. These two, Bill and Bath and Body Works, these are top 5 holdings. So there's a ton of capital that are put into these two stocks. And I'm going to be watching these tickers to see if they have any sort of aggressive moves to the downside, because that can in turn have a very significant impact on the firm itself. Same applies for IAA. That's a top, I believe, top 20 holding, ton of money in there as well. So just kind of looking at the big positions and seeing if they have any significant drop. But even with a company like Uber, they just bought that in Q1 of 2022 and already down nearly $10 a share on that. So as we scroll down the list, Snapchat, just horrible, FND, horrible, and even AAP. So the total is around negative 1.35 billion. That is just 21 positions here. This does not make up their entire portfolio, but I don't see any realistic outcome where Melvin survives this. I think margin calls are inevitable. They're certainly going to liquidate some positions. I know they have done that in the recent past. Really, there is almost no light at the end of the tunnel. It just continuously gets worse and worse for them.
Do you think that was a mistake?
No, I think Gabe Plotkin is one of the finest investors of his generation.
They lost nearly $7 billion, and now they're trying to raise more money for a new long-term only fund. Now, I don't know who would be that sick and deranged in the head to actually feel secure with him managing your money, but risk assessment and portfolio management is certainly not his specialty. I could, with his past proving that. So, yeah, I would stay away from this by all means. Now, the one factor that I think is really significant and could be the catalyst for them crumbling is Ken wanting that money back. So he gave them billions of dollars. He's asking for it back. Ken's a smart guy. He's a survivor. He's a leading guy in high frequency trading and technology. He's been around since 2008. Like I mentioned, he's a survivor. He's one of the world's richest men, and he knows what's going on. He knows everything there is to know probably about Melvin Capital and a lot of other investment firms. So I guess asking for his money back is a smart thing, because he's getting it back while he still has the chance to get it back. While they still have funds available, he wants to make sure he's going to get his payment before there is no way of paying him. And that is, in my opinion, a smart thing of him. Now, why is this detrimental to Melvin Capital? Well, Melvin Capital, as we could see, their largest holding is only $1.1 billion. So imagine, like I just said, if we're following ticker Bill or BBWI or even Live Nation, if these drop aggressively, that is going to have a huge impact on the firm and can cause a margin call. It can cause, serious liquidations. So if they were to give him that money back, unless they have cash on hand, they would have to essentially liquidate a top two holdings. Okay, that is going to be detrimental to their firm. We already know that 7 billion last year was over 55%. So to take an additional 2 billion out, plus what we just saw is already red, it would just absolutely wipe them out, in my opinion. So I don't know how they're going to be able to do that. I don't know if someone is going to be digging into their own pockets or sourcing that money from somewhere else. But that is just something to keep in mind as well. Now, the second part to this is that they like to buy a ton of options on these long positions. So we know Uber has been down since they bought it. They bought call options. Affirm, they loaded up on Affirm, it tanked, and they bought call options. Okay, I hope you guys understand this trend here. Snow, Align, IAA down over $100 million, and they're buying calls. So they're adding fuel to the fire here by playing the options game. It's not helping them. And if we look at what they've been selling, well, we see the same exact thing. We see MasterCard, Twitter, Snapchat calls. Again, Snapchat down huge. ATVI calls. MasterCard, they lost a lot of money. Calls. Square right here. Look at this valuation, guys. I mean, oh my goodness, they are getting swamped. $239. It was trading at nearly 100, or maybe even in the high 90s a day or two ago. McDonald's, ATVI, selling Facebook calls. I mean, they got obliterated on Facebook. So Q1 of 2021, buying calls in the 300s, those are expiring worthless, so Twitter calls not looking good. So hopefully you get the point when it comes to Melvin Capital. They're not making good decisions from an investment standpoint. The risk assessment is not good. The portfolio management is trash. And clearly the history is showing that. So that's not me being a hater. That's just me providing the facts for you. So I hope you guys have enjoyed this video. Let me know what you think in the comments section below. And as always, we'll catch you in the next one.